Boom! Come on, Naeem. Hold on, Naeem. Naeem's upset with me because I pillaged his village and took all the Bangladeshi honeys back to the US with me. So he's a bit upset with me today. So forgive me, Naeem. Though I'm not sorry, because they belong with me anyways. I have conquered the Bangladeshi Huns. There's no longer any females left in Bangladesh, so don't even bother going if you're thinking about traveling there. Because they're finished. They're gone. They're mine. Figured I'd do something a little bit different while these financial markets are absolutely imploding. Pompino has turned into Dumpino, but only for the moment, because his plans are down the road to Pompino us back out of this wasteland, this despair that we're in right now. Got my sparkling imported from Italy. I loaded up heavily on the Pellegrino before the tariffs because I knew it's a product of Italy, right? It says it right here. Where's it at? Bottled at the source. San Pellegrino Termi, Bergamo, Italy. Got my pre-tariff Pellegrino. Telling you, I'm loaded up. Got this one right here. Beautiful. Got my espresso. Let's get into it, ladies and gentlemen. All right, so we've absolutely nuked off the Monday Open. So a lot of different directions we can go with this. Let's start with this, okay? Let's start with this. This is a long game that we're playing here. So the individuals who are able to be forward-seeing and forward-seeking, have capital on the sidelines, have a business, have an income, like those inside of the Taylor's Code, like those inside of our network, who continually make money on a day-to-day basis. And they're not looking at financial markets as a way to create an income for themselves. We're going to be positioned properly for whenever this inevitable upturn happens, okay? So let's start with that. Always make sure you have an income. Make sure you're making money. Make sure you're putting yourself in positions financially where when you see blood, when you see recession, when you see pullbacks of 20, 30% on the S&P, you have ammo, you have ammunition to go ahead and fire off to be able to benefit off of these pullbacks. Okay, so that's the overarching lesson in all of this. If this is something that you're brand new to, something that you haven't taken seriously yet, no, you must have an income. Okay, I will always stand by that. You must have an income. I've spent the last 4 years of my life building a substantial income for myself so that whenever moments like this take place, I'm not jumping off of buildings and fucking getting evicted from my home and having to sell my GT Benz and all this. No, it doesn't happen because I have money coming in regardless. I have business. Okay, I have a business that generates me an income. So when things like this happen in financial markets and we have to go through this pain of the tariffs that's Trump putting onto the global economy, I'm not sitting here thinking emotionally and trying to sell everything at a loss and try to get out of the market so I can be able to pay my car note. No. I have the ability to position myself for the eventual 100%, 200%, 300% gain on the S&P over the next couple of years. Okay? So you have to see everything's forward thinking. Okay? So let's go ahead and dissect what's happening right now. Friday, the VIX closed a weekly candle about as high as it's ever closed in history in comparison to 2008, financial collapse, financial crisis, and then the 2020 COVID drop. So what people thought was, okay, on Monday, it's very unlikely that we see the VIX spike even higher after closing the weekly candle that high. Well, it did. And markets sold off even further. And then you saw that effect take place in crypto and Ethereum and all the other assets, Bitcoin, on Sunday, okay? So we're seeing that pullback that we saw in equity markets finally hit crypto because crypto is showing relative strength over the past week, which was very constructive, but we saw it finally take its toll. So how do we think about this in the longer term? What's going on macro? Well, Now we're in a position where the Fed and Jerome Powell are going to start to have to comply with what's taking place with this tariff situation. Okay. The bond market is heading lower. So yields are heading lower overall right now for the US bond market. So regardless of where inflation's at, regardless of the effect of inflation, or regardless of the effect of tariffs on inflation, Jerome, just based off of the bond market, is going to have to start cutting rates, and that's getting priced in right now in the rate cuts. And I'm going to show you guys that chart here in a second. Okay, so the way that Jerome's looking at things right now, how he's trying to paint the picture is inflation's been coming down, inflation's continuing to come down, and until they get inflation at their target rate of 2%, they aren't interested in further bringing down rates, okay? Because if you bring down rates, you can cause inflation. He's trying to get inflation down, so he wants to keep rates higher. Now, with Trump's tariffs, he understands, okay, it's likely, and this is his thinking, I'm not saying this is necessarily true. His thinking is that if the tariffs are getting placed, that's going to create inflation. Therefore, we don't want to continue to cut rates so we can stop that inflation. Okay. But the issue with that is two things. Number one, inflation's actually been coming down this entire time. And there are studies showing that those tariffs that have been placed in the past, like the Trump administration had done back in 2017 when he came into office, and I'm going to show you what the markets look like back in 2017, what's likely going to happen this time. But a lot of that tariff doesn't actually get transferred over to the consumer. The consumer doesn't actually eat the entire percentage of that tariff. It actually was very minimal. So what's possible is that it also won't create nearly as much inflation as people are anticipating, which is bullish because that would put Jerome in a position where, again, it makes sense for him to continue to cut rates, okay? But regardless of what tariffs do to inflation, regardless of how the tariffs affect markets, because bonds and the bond yields are coming down and the bond market's coming down, Jerome is going to have to cut anyways. He has to, because he has to keep up with the bond market. He has to be able to maintain profitability. So he's going to have to bring down rates, okay? So we went from at the beginning of this year, we went from 2 likely interest rate cuts by the Fed to 4 to now we were pricing in 5 at one point this morning and yesterday. Now it's back down to 4 rate cuts this year. So it's going to happen. Inherently bullish for risk assets, inherently bullish for crypto if we don't head into a recession. That's the big caveat. If we don't head into a recession. Now, if we head into an economic recession globally because of these tariffs, then yeah, all bets are off. We're cooked. Okay? Certainly. And we understand that risk. So now that we're at the levels that we're at right now on the S&P, on Bitcoin, which we're all going to take a look at here today, yeah, now I'm finally in the camp of saying, okay, recession is possible. That's just the reality of it. I have to play probabilities. I have to be honest with myself and the people inside of our Discord. Okay, it's possible that a recession could come from this if negotiations don't happen with the other nations across the world, which in my opinion, they will happen. So I'm not expecting the recession, but it's possible with the way that markets are moving right now. It's possible. Because if China doesn't want to strike a deal, if the EU doesn't want to strike the deal, if the major players around the world don't want to strike deals with the US, these tariffs stay in place the way that they are right now, people are going to get laid off because companies' profitability is going to go down. So they're going to have to do layoffs. There's going to be less spending by consumers because prices are going to be higher. It's going to cause a recession, okay? If negotiation does not take place, okay? If. Now, and my hair looks like how the tariffs have affected the markets all fucking, like I said, Naeem. I took all the Bangladeshi honeys and I brought them back to the U.S. and, I was a little busy this morning getting them acquainted with the U.S. lifestyle, if you know what I'm saying, Naeem. So I didn't have time to fix my hair after all that. But the point I'm making is that it's possible that we head into a recession if these tariffs don't come off the table. Now, the good news is already countries are folding, which they will, because the U.S. simply has too much power and is able to outlast these other nations that they're going to have to come, capitulate, and come to the negotiation table and say, all right, we're either going to go to 0 tariffs between the both of us, or we're going to do reciprocal, but we're just going to bring our tariffs down so yours aren't as high on ours. So these are the things I'm thinking about macro, so we can see where the market's going to head. So let's take a look at a couple different things. So we'll start with the macro. So we'll start with the CME watch tool. Okay, let me pull this up for you animals. Okay, so this has been fluctuating a lot. Let's see. The old little Mr. Producer. We got all them hoes. Already name. Let me do extra scenes. Screen capture. Okay. Mr. Producer it up. There you go. All right. So once again, let me explain how this works. So here are the rate cuts. Rate cuts are bullish for risk assets. Okay? They're bullish. Why would we get rate cuts? Because inflation is way down. We don't need to have high interest rates. Therefore, we make spending, we make borrowing cheaper. Okay? The reason that Powell doesn't want to cut as quickly is because he's trying to get inflation down lower, and he's anticipating tariffs creating inflation. Therefore, he's going to have to keep the interest rates higher. Okay? What's going to cause Jerome to cut? If either one, inflation gets to their target of 2%, and then he wants to continue to cut, or the second thing is now we're seeing with the bond market, the rates or the yields are continuing to come down. That's also going to force him into rate cutting regardless of what inflation's at. So those are your two factors. So after this nuke on Friday and Monday in these equity markets and crypto, you see already that these percentages have shot way up. Okay, so now this was actually higher this morning and yesterday. This was almost at 50%. They actually had this, or it was over 50%. They had it as it was more likely in May that we're going to make a cut. Now they've got it back up to 65% that we stay the same. I don't like that. I want these to come down sooner rather than later, but we'll see what happens the rest of this month. So we went from two interest rate cuts to 4. So we have one cut likely in June, a second cut likely in July, a third cut likely in September. So that's 3 in a row, 1, 2, 3. Then a pause, and then likely another cut in December. So that's your 4th cut. So we're looking for that. So we want these to continue to come up to continue to create the opportunity for the economy to move, cheaper capital for low cap companies, bullish for risk assets. Okay. So we'll see what Jerome does. They're having an emergency meeting today to talk about interest rate cuts. They might even do it now. Who knows? We'll see. But this is where we're at with the probabilities. Okay. If we want to go to aggregated, give us a little bit of a different view. But you see how it actually pumps these numbers way up. So you're looking at 70% chance that we do June, 83%, 87%, 88%. So 1, 2, 3, 4. I mean, it's almost, anything above 80% is basically a guarantee. So, 88% chance that we're at 3.2 basis points by the end of this year. Yeah, you're going to get 4 cuts. Okay, beautiful. So we want that, all right? Now let's take a look at what's going on in the markets. So you saw the VIX close on Monday or on Friday at one of its highest weekly closes in history. On top of that, we still pumped the VIX even higher today on the Monday open, which was not expected by many. Okay, so let's take a look at markets here. That's ETH. Let's take a look at the VIX, and then we'll get to Bitcoin and these other assets. Let's go to the VIX. Okay. So we already see it coming back down, but we'll see what happens. So you see here on the weekly, I actually have the weekly up already. So on the weekly, the VIX closed all the way up here. So this was the highest close since, 45.31. Okay. This was the highest weekly close since COVID drop. And the last weekly close, that high was October in the 2008 financial crisis. So that's exactly what I told you guys at the beginning of the stream. So 45, let's go to 45. Right in here. Okay. So this was the highest weekly close we had on the VIX since the 2008 financial crisis and then 2022 COVID. Why am I mentioning this? This is a black swan event. This is a generational bidding opportunity. This is a generational place to go ahead and start accumulating equities and strong assets, because this is quite literally black swan level sell-off on the equity markets. Okay, again, the only two other times that we had a weekly close this high on the VIX, 2008 financial crisis, 2020 COVID, black swan events. Okay, once in a decade type of moves. So what that means is below equities, you can just look at the S&P, had a massive sell-off. Okay. So here's the first way we can look at this if we don't believe that a recession is coming long term. Okay. If we look at what happened in the 2008 financial crisis, the last time that we had a VIX close that high, which is volatility, we had equities sell off from right about here as the VIX was pumping. Okay, and so we came down, set our low right here. It's about 664. Okay, and once we hit our low, as the VIX was getting crushed, there's still more downside after the 2008 financial crisis. We were pretty much up only for you could call it, because how long was this? Is this even a bear market? Nope. So you basically didn't have a bear market till here. So you basically went up 3x over the course of 6 years with no real bear markets. Okay. So guess what? Anything that you bought, strong asset down in here when this was taking place, generational bid in equities. Okay. So that's your confluence. Now let's take a look at the 2020 COVID drop with the VIX up top. Okay. So I'm just giving you guys perspective, and I'm going to make the overarching point here soon. Okay. Just giving you perspective. Where's the confluence with where we're at right now? Okay. Here's the last time that we've ever closed the VIX on a weekly this high on the volatility. Okay. It was a lot faster. Boom. So you get your VIX spike maximum. It actually called the Pico low here. Okay. So you get this quick, fast nuke sell-off due to COVID. So something similar that we're seeing right now. Okay. You create your low right here. And then you're basically up only a little bit over a 2x over the course of a year and a half. Okay. You buy down in here, generational bid. Okay. Generational bid. So now we look at the type of sell-off that we had over here. Okay. This COVID sell-off is looking very similar to this one right here. Okay. So we got our black swan sell-off. Okay, you get this. Get this. And we can even compare the sell-off that we had in percentages. So this was a 35%, 21%. Okay, now is this a COVID level black swan? No. So it makes sense that it wasn't as large of a sell-off. Okay, but it was a quick capitulation. All right. So there's one of two things that are going to happen here. All right. One, we either get the V-shaped recovery that we got during COVID back down in here, and you effectively just quickly place your low. People step in during this nuke whenever COVID was happening, the end of March, and then you literally just go fucking up only for a year and a half. Okay, up only, literally up only. Okay, so if we did something similar over here, the same thing. It's just another up only leg for another year and a half. Okay, because we had a similar type sell-off on the VIX. The reason I like that the VIX even pumped harder, peaking at around 60, is because we got closer up to this August 5th nuke and closer up to where this COVID VIX spike was. Okay, so we really capitulated hard. So if this is going to be a V-shaped recovery similar to the one that we had with COVID back in 2020, then yeah, generational bid. Okay? The contrary would be, okay, this is not a generational bid zone, and what we're going to get is actually a larger recession, similar to something like this before the actual financial collapse, where it was an elongated drawdown over a long period of time. So it was from October 7th all the way to March 9th, so over a year. So this would have been close to like a year and a half, basically, recession. Okay, or something like this. Which would have been a couple years as well. So from 2020, that dot-com bubble collapse, all the way down for 3 years. Okay, that's your longer-term recession scenario. Clearly, we don't want to see this, nor do we want to see this collapse from 2007 and 8. Okay, these are your longer recessions. What happened with COVID was not a recession. What happened with COVID was a V-shaped recovery, kind of scam sell-off, and then straight up only. I'm in the camp right now that this is more so, this COVID scam pump or scam sell-off is what we're going to see here, because this was so quick and so vicious, just like the COVID one, that we do something like this. The only way that happens is if the rate cuts happen quickly and we come to the negotiating table with these nations across the world and we take the tariffs off and actually get free trade cracking. Best case scenario, we get zero tariffs across the board. Free trade is actually implemented across the world. Companies' profitabilities are all going up. People are going to be employed at higher rates. The only people who get damaged by this are going to be the governments who are collecting a revenue off the U.S., who are paying the tariffs to these nations. Otherwise, free trade is incredibly bullish for everybody, because economies are going to boom harder. Businesses are going to be more profitable. More people are going to get hired. More people are working, making sure that the employment's down. It's going to make sure that more people have money in their pockets, therefore they can spend and inject that liquidity into markets, inject that liquidity into the economies. Bullish for everybody. That's best case scenario. But if we don't get these tariffs to come off the table and we actually see these prices going up substantially and that inflation comes up substantially, then you could see the broader recession across the market for a couple of years. Not what we want to see, but I don't expect that to happen, because the way I see Trump doing this and the way he's positioned himself with this is he's using the tariffs as a negotiating tool. Okay? Come to the table. Let's negotiate. Let's get these tariffs off of each other. Let's put ourselves in a position to be financially competitive, the U.S., and allow other nations to be able to get tariffs from us off of them. If we're able to leverage that and actually get to zero tariffs, like with the EU, for example, you're in for a fucking ridiculous pump like we saw from COVID up through 2021. Very similar style. So that's the idea. Two options. Either we're literally at the do or die. It is recession, or we V-shape and we fucking cook like we did with COVID. Fingers crossed it's a COVID fractal. So That's the VIX, okay? So let's get the S&P down here. So that's where we're at on the VIX. We got to see this bad boy get crushed because this thing is fucking up high, okay? Now, if we just look at the equities chart, look at this. Look at how well these fucking levels have played that I had marked out, okay? So here's the levels I've had marked out on equities, okay? I've had these all marked out for weeks. We lose this first demand zone, turn into supply. We come down, we hit this demand, bounce, reject off of the overhead supply, lose this demand, turns into supply, come all the way back down into this demand zone. I had this all drawn out before these levels were hit. Okay, so all these levels played out beautifully. So what do we see that makes me bullish for potentially a turnaround? We lost this demand zone, and look at how perfectly this bought back right up into this demand zone, okay? So we nuke down below demand, we get bought up incredibly quickly, and now we're back inside of this demand zone. If we hold this demand and we can start to reclaim these levels, bulls are back in control. How do we know bulls can be back in control with the buyback? Let's go on the lower time frame. The volume is flying in on the lower time frame to save this chart. You see a huge spike in volume on the 6 hour. We can even go to the 2 hour. You see these huge ramps in volume. And this is not little. This is the S&P we're talking about. This is billions and billions and billions and billions and billions of dollars worth of volume going up in an upward trajectory, okay? That's bullish because it means more buyers are stepping in to kind of scoop this fall up and be like, ooh, and kind of pull it back up into here, okay? People are stepping in and understanding that this is a generational bid zone. If they're wrong, hey, they're wrong. They took their chance, though. If they're right, they got fucking fantastic buys, okay? Whoops. I fucking get this shit out of here, okay? So the volume's ramping way up to keep this chart within this demand zone, okay? Because you lose this level, then yeah, I mean, you're looking at a multi-year potential recession unless you get some type of incredible catalyst that's going to pump markets back up again. So the volume's coming in, okay? We're holding this demand. Beautiful. We have to hold this. Last line in the sand, we have to hold this demand, this major demand zone, okay? If we go to NVIDIA, nice buyback. Yeah, same thing. You see, look at this. I had this level drawn out way before this nuke happened, okay? So I had this level drawn out while this was still up in here, right? Look at where we come back into. On the 4-day, we would do the weekly. So the weekly, right? It closed on Friday right down in this demand zone. Today, we had that flash crash at the New York Open and this morning. It opens, it comes all the way down into here, right? Down below the demand. And then, boom, volume comes in, scoops it back up into the demand zone, okay? So that means buyers are stepping in and they're trying their absolute hardest to see, put this price back up into a demand zone to carry it up. You can do like 8 hour. Look. See, like the volume is coming up into this level, trying to push price back up into demand. Keep it up above these levels so we don't get this cascade down lower into like the 30s. Like, because this is your next major consolidation, accumulation, right? Like, otherwise it's here. Like, this is it. And then if you lose these levels, you're doing this on NVIDIA. All the way back down into here. That's exactly what's going to happen with NVIDIA if you lose these levels. Because look, there's nothing holding it. There's no structure down here. It's just air. It was a straight pump up, quick little reaccumulation, right? Build short to go long, boom. And then you're up in here. This could be looked at as distributive. If you lose this level, you come out, you just retest it, and then you nuke all the way back down. So your NVIDIA is cooked if you lose these levels. Okay, so we're at the absolute last line in the sand, do or die. these are where these assets have to hold. But what I'm saying is bullish is because quick buyback. Bang, Nvidia got a buyback. S&P got a buyback. DXY is pushing here. Look, see? These levels work. I've had these drawn out for weeks, months at this point probably. We lose it. Supply, look at what happens. You come back down into this demand zone, this major demand. Get the bounce back up into the supply. Look what we're rejecting. We want it to reject, come down. Boom. Okay. Here's why Powell is going to have to start cutting rates potentially. Okay. Look at this. See? Same thing. Look at how beautiful this is. Had these levels drawn out for months at this point. So the bond market, what I was saying about with Powell and why he's going to be forced to cut rates if the bond market continues to go lower with interest rates is he has to make sure that they can maintain profitability on these bonds. So as these levels get hit, so we took this liquidity and we nuked down here from the bond market. We come back up, we get this pump right back up into supply, okay? And look what we're rejecting. Perfect rejection off of supply. These levels work. So if we go in the lower time frame, okay, right in here. So what you're going to see is this rejection take place. And bonds are going to come down lower into this demand zone. Okay, you're going to come back into this major demand. And what you're going to see happen on bonds is once you lose this demand zone on bonds, you're going to see a nuke into here. Somewhere in here, okay? Because this top is very distributive. This is a distributive top on bonds. Okay, so you're basically, you're distributing, prices moving up in here. So people are unloading their bonds, distributing, and then it's going to come back down into here, and then maybe even break down further. Okay, so what that does is it puts Powell in a position where he's going to have to cut interest rates. Okay, which is bullish. So we like to see the bond market continue to plummet. Now, let's take a look at what that did for crypto. Okay, this morning, what happened? So on Bitcoin, as everything was nuking, go to the 6 hour, 2 hour. Crypto had this scary drop, okay? So we actually lost this low that we had set on Bitcoin at 76,000, okay? We came back, we swept all that liquidity. We even took out all of these. Did we take out this low? Let's see. Yeah, looks like we did. Yep. We took out that low. Basically filled this whole inefficiency from this pump on Bitcoin. That is everything that you could possibly need if we're going to remain bullish and then break back higher and run this bitch back. That was everything that you needed. Everything, because you completely filled this entire inefficiency, right? This FVG from Bitcoin, it's completely filled. There's nothing else you need to do. You got this wick, you completely clean this bitch out, right? Because the last high was up in here. Yeah, I mean, you cleaned it out. You cleaned it. And then what you saw on Bitcoin, which was incredibly constructive, was as soon as this wick took place and you got these liquidations, the buyback on Bitcoin was huge. It immediately snapped all the way back up to 81,000, and now we're back down to 78. But you got that immediate buyback up into this range. So as long as we can close this daily candle, and this is what I'm watching for today to remain bullish or not, all we need to do is close up above a positive or an upward trend, right? To continue this upward trend along here. If it was down here, the close, then yeah, we're back in a downtrend. But because we got this buyback, if we can keep this trend upward, we're looking beautiful. Okay, and look, I'll show you the volume here again to show. Look at this volume on Bitcoin. Look, as soon as it nuked back down into here and it was coming back in, you see this huge increase in volume. Boom, straight up. The bid on Bitcoin is massive right now. And so what they do is they do this to try to catch that falling price and create these and create these bottoms, right? It's a cascade. So you see the price nuking with low volume, right? See right here is tiny volume, just right here. Okay. Finally, you get some sell pressure. You come back into here and you see the volume spike because it's basically trying to catch this and go and keep it from cascading and go like this. All right, bring it back up. Bring it back up. Just catch that with this upward volume, right? So I like that. We caught it before we broke down too far. What we can't see on Bitcoin is this price come back into our previous range. As soon as Bitcoin comes back into this value area, this 8-month, 9-month reaccumulation range, and essentially comes back into this 4-year range that we had created. Look at it in log mode. It's a little bit easier to see. If we come back into this 4-year reaccumulation, then we're cooked for a while. Now we're looking at a longer term bear market as opposed to a quick V-shaped recovery, because I mean, I actually should already have this drawn. Yeah, I do. Look. As soon as price, if we accept price back into this range, we're cooked. Because now you've had 4 years to reaccumulate, build this range, and we press up against it for 8 months before we finally have this breakout. If we accept back into here and we lose this level and we come back into here, we'll get this retest, and then you're going to see something like this. At least all the way back down to 32,000. That's the type of crash you're going to see on Bitcoin. You lose the top of this range, right? You're cooked. You're cooked. Because that's just the reality of trading within a range. Because once you accept back into the range, well, now you're at range highs, and you're just going to come back down and play the mid-range. Now, I don't imagine a scenario where we come back down and play the bottom of the range, but technically it's possible, depending on how much of a catastrophe these tariffs could be for financial markets and global trade. But I mean, you're trading at least down into here. Okay. If that happens, sure. If you get to buy Bitcoin down over here, again, it's generational. The problem is just the time, the time in which you're going to have to wait for this reaccumulation to take place and then break out again and eventually hit our 173,000, 1.618 fib. It's going to be a couple years. Okay. Yes, generational. Yes, amazing buy, but you don't want that to happen. That's not the best case scenario. Okay. So it's do or die here. Okay. We did exactly what we needed to do, but we need to continue to do that. So look for Bitcoin. This is what I'm looking for today. We need this daily close to happen above that 76,600 low. We need to close above this to remain technically in an uptrend on Bitcoin. Okay. That's what I'm looking for. But encouraging so far. Huge, the buyback. ETH, same thing. I'm looking for a daily close above 1,500. Okay. Same thing on ETH. Look at the volume that came in here. This is constructive. This is indicative of a low being placed or a bottom being put in. You get this cascade. Okay, so your low volume right here. Sellers come in. And then buyers step in here at the last minute and catch this from breaking down too far. And then you want to see something like this, right? Again, super constructive and indicative of a bottom if it holds, okay? So now here's the worst case scenario for ETH, right? So we need to close. I'll put it back on the daily. We need to close above 1,500 today, okay? If you see ETH, and look at how it's playing our demand zone beautifully, perfectly, right? So we've had this drawn out for a while too. If you see ETH break down from this demand zone, right? So we wicked down into it right here, 1,400. We're cooked. Just let you know. If ETH closes before 1400, below 1400, you're going to get one last counter rally, complacency shoulder, opportunity to get out, and then you're going to see this bitch roll over and just be permanently cooked. Because at that point, the structure is so destroyed that you're not going to be breaking the new all-time highs within any reasonable time frame, because this is your last level of defense, of real volume, of real demand. Otherwise, when you come back down into here, it's just cooked. You're done. You're done. And here's why. I'll show you. But again, it's doing what it needs to do right now. Barely, but it's doing it. So let's put the volume profile. Now let's do we have it on here? No. Look, see? I mean, look, we're literally right there. Look, this is how important this level is. So this is from our Pico low, bear market low on Ethereum. This is our fixed volume profile, okay? So the most transacting on Ethereum, the most volume on Ethereum from June 2022, the Pico low, all the way till April 2025, the most volume, the most buying and selling of ETH has taken place at $1,600, okay? This is such a huge level. We need to flip this naked point of control again, okay? Let's see if I have a price label for it. Yep, 1620. We need to flip this 1620 and remain above it, and we're looking good again, okay? But we got to close above 1500 on the day. We got to stay above this demand, stay in this demand zone to be able to have an opportunity to run it back up whenever the markets turn around. So that's our level on Ethereum, okay? There's a naked point of control. We got to get back above this. Now, if it holds, which I'm expecting it to as of right now, if it holds, okay? If it holds, anybody buying in this area where all this volume is stacked up, right? So basically in all this price region right here, and then this price region again right here, this demand zone. How have those buys aged? All these buys that happened here, here, and then are now occurring here. That's how they're going to age. So yeah, huge RR. Fantastic. Massive opportunity for returns on this, if the demand holds, okay? Because this was our demand right here, pump. So we got to hold again here before our next move up higher, okay? Again, as of right now, I'm expecting it. We'll see. Here's the other thing on ETH we've been talking about for months. So I was talking about how we were waiting for that final capitulation on Ethereum. For us to get a bottom. This is why we had been bearish on ETH for the last couple of months. We kept saying, oh, we could come down lower. We could come down lower. We remained bearish because, look, we talked about this for how long? Okay. So when we got that August 5th nuke last year and we had the VIX spike up to where it spiked up to, everybody was capitulating. The price was destroyed. This is what our RSI looked like. We had been talking about this for months. So we got our first sell-off, oversold in the RSI. Get your quick little bounce, and then you nuke back down into here, right? And you get this oversold, okay? So we talked about it over here saying, okay, well, we got that price action over here. When are we going to get that oversold on ETH? So we had this big liquidation wick, right? And we kept saying, well, it's probably going to go lower here. And it's probably going to go lower here. And then we got up here, and then we were saying, oh, it's probably going to go lower and go to like 1750, 1700, right? The issue was it took too long for us to get that final capitulation that it ended up happening down over here at a much lower price than anticipated. So we're expecting like 1750, 1700. And we ended up getting it at around 1400, right? Okay, 1411, right? Why were we expecting that? Because on the RSI, we never got into this oversold territory. So on this first liquidation wick, everybody's like, "Oh, that's got to be the low. There's no way we go any lower than that." But this is where the RSI was at on the daily, right? It's a little bit similar to here, okay? So we never got that final follow through into the oversold territory until right here. Finally, we got the capitulation. You can see the red there. I got to zoom in on it. We finally got that red shading, that oversold territory. That's capitulation. Okay, this one barely, but this one we actually came down into it. This is capitulation. Capitulation is happening right now. So again, indicative of a bottom should we turn around here. So there was our final capitulation we were looking for and why we were calling for lower on ETH and expecting it if it happened, right? So we finally got it. So you just got to give it a little bit of time for this shading to come in after a couple of days. But that was this right here, right? So from August 5th to 8th, 7th, 8th, okay? So we finally got that on ETH. Beautiful, all right? So we got a capitulation on ETH. We just got to hold here now, right? We got to hold here and start stacking up higher and then reclaim this range at 1700, okay? But this is our line in the sand, okay? This is where it has to hold. This is it. This is it. This is where we're at, ladies and gentlemen. Now, here's what's incredibly encouraging about all this. Altcoins are pretty much fucking holding strong. Andy and Wolf, Pepe, Brett. Well, I haven't looked at Brett in a while, but Pepe for sure. Our ETH beta, as ETH capitulated here, has not nuked to the same degree that Ethereum has. Beautiful. Why is that beautiful for us on our Boys Club bags? Sellers ran out. So I noticed this morning. While ETH was capitulating, look, ETH is down 2.74%. Pepe, green. Brett, green. Andy, up 16%. Wolf, up 8%. Do you have any idea how bullish that is? It's ETH beta. It's supposed to trade the way that ETH trades. If ETH is down, these should be down even further. If ETH is up, these should be up even further. Look, ETH just capitulated this morning. We're looking at the chart right now, right? ETH just capitulated. We nuked down to 16 or 1411. ETH is down on the day by 2.76%. Pepe is green, holding its range. Look, it's up higher. We have a bull div, a divergence, bullish divergence. Okay, so we're up. In the same time frame, there's ETH. Pepe, bullish divergence. ETH is down. Pepe's up. These are the kinds of assets that we're getting generational bids on right now. This is why I'm bidding. This is why I'm looking at this and saying, okay, we can only go one of two ways. It's either full-blown recession, and yeah, we're going to look to sell and rebuy lower once we hit certain levels that I obviously give into our private Discord, not live on YouTube. I'm not going to tell you what numbers we're looking for to where we're going to sell. But I have levels where we say, okay, boom, sell here, we buy back lower. But if these hold, generational, bull div, Pepe is in an uptrend while ETH is in a downtrend from March 11th, this low on ETH, to April 7th. Pepe's up. ETH is down on the day. Let's change this one to Brett. Give me one in USD. There we go. Brett wrapped on Ether. Brett, green on the day. I'll just use this one. All right, green on the day. Andy, right in our demand. Andy's up 16%. Somebody's shoving Andy right now. Shoving. 16% up on the day. ETH is down. Wolf. Up. 8, 9%. ETH down. Do you understand? So, again, these are all things that as long as equities in the global financial markets and economy don't go into a full-blown recession, these are all indicative of bottoming. We're trying to put in bottoms. If our beta, if ETH beta of these meme coins and these assets are trying to put in these bottoms as Ethereum capitulates, that's indicative of a low. Generational bid zone. So, but the craziest one is Pepe. People got to start talking. We got to talk about this. Like, this divergence, the fact that Pepe is up, right? The other boys club weren't the same, but Pepe is the only one that's like this. It's up on the month. So in the past month, Pepe's up as ETH is down. So that means this chart is likely bottomed. The Pepe divided by ETH chart. Look, see? Pepe, this is what I've been talking about. Since the inception of Pepe, Pepe has gained value against Ethereum. That means that if you hold Pepe since the inception, but let's call it since this low, April of 2024. If you hold Pepe over Ethereum, you made more money. And look at what's happening here. We put in a bottom here at March 10th, March 11th, when we had that first big drawdown. We hit this bottom. Pepe has been outperforming Ethereum since this level. And this is a clear uptrend. Okay? So when Pepe and ETH and all these assets start turning around, this chart is going to fly to new all-time highs. And this is why we hold ETH beta. Because Pepe is a better hold than Ethereum over the course of this cycle. This is going to pump harder than ETH. This chart right here is all the alpha you need on Pepe. This is as much confidence I need on something like Pepe to say, holy shit, this is a premier winning asset this cycle. ETH is down on the day. ETH has been down only since March 8th, March 10th. Pepe against Ethereum has been going up. The price of Pepe has been going up against ETH. This is winning assets. This is how you pick winning assets. This is how people make outsized gains in a market where overall, over a long enough period of time, the market will go up. But the biggest winners are the ones who pick assets like Pepe. The winners are the ones who pick these types of assets on a long enough time frame because they understand it's appreciating against the value of Ethereum. It's L1. Therefore, this is a better hold than Ethereum. Look at it. And put in its bottom here. That's huge. Huge. So if I put down below, just Pepe. When we eventually see this chart start ripping again, as long as we can get these tariffs worked out, you're going to see this pump. And this is very similar, but you're going to see this rip. So that's why you want to hold Pepe over ETH. Okay? Hold Pepe over ETH. Beautiful. Yeah, gentlemen. I mean, it looks fantastic. So I'm loving where we're at in terms of the performance of the ETH beta. The issue is the broader market. Are we going into recession mode or are we going into reversal mode, V-shaped recovery similar to 2022 or 2020 COVID? That's the question you got to ask for yourself. That's the question we got to try to answer. Recession or V-shape? We got to figure that out. That's the tough part, right? The gentlemen who can figure that question out are obviously the ones who make the outsized returns. People who can't figure that out, they're gonna do poorly. But overall, equity markets, it's discounted. We all know SPX is going to go up only over time. So regardless of if you're trying to position in crypto or not right now, now would be the time to position into equity markets. That one is just the no-brainer right now. You can't lose. Anytime equities are down 20 to 30%, even if you draw down another 10% and then you just buy some more down there, like, you're fine. You're going to win in the long term. So this right now, 1,000% shove spot for equities. Crypto, we got to see where we're heading at. I mean, Bitcoin is a shove. Bitcoin's a shove, regardless, because long term, it's always going to be around. But in terms of beta, that's where you need to be very particular on whether or not we're bidding right now or whether or not we see ourselves going into a recession. Okay, ladies and gentlemen, outside of that, that's fucking work. All right, I'll see you guys inside the Discord. If you're not already inside the private network, link is in the description. Link is in my bio, X bio, YouTube bio, etc. taylorscode.com. Join as a professional, join as a gentleman, join as a hero. You get access to different portions of the Discord based on the tier that you join. But as long as you join as at least a professional, you're going to get access to myself, Bobby, Logan. You're going to learn how to be able to build e-commerce stores to be able to generate income for yourselves, be able to invest into crypto, make money in crypto, equity markets with me, fitness in there. We talk about diet plans, nutrition, supplementation, right? Actual edges that you can gain physically so that you can perform at the highest levels, because all these things come back to becoming a competent individual, being able to make money in all assets and all environments. So outside that, I gotta get out of here, Mr. Producer, and then I'll see you guys. I'll talk to the gentleman inside the Discord. All right, do a little Mr. Producer. We got all them hoes, Mr. Producer. Don't worry, Naeem. I'll send back your honeys soon. No, kidding. They're staying with me.